Let's do a quick technical analysis of the crypto ecosystem. After Bitcoin's recent sharp drop, and yes, we've seen a lot of volatility in the markets, we're going to take a look at how these highly valued assets are holding up and whether this is truly a threat that could mark the beginning of a bear market. Right now, you're looking at Bitcoin's 4-hour chart. After that aggressive drop in Bitcoin and across the entire crypto ecosystem, we've seen a sudden recovery. But if we zoom in, we can see that this recovery is already going through its own correction. In this video, we'll analyze the most likely scenarios for the crypto market moving forward, as this type of movement isn't exactly unusual. That said, we shouldn't lose sight of Bitcoin's key structure, which is this trend line I'm marking here. So far, it hasn't been broken, meaning that, as of today, we can't say this is the end of the world. Now, looking at Ethereum's 4-hour chart, notice how, after its recent surge, it established a macro structure that we consider highly important. This level was recently revisited after the so-called apocalyptic drop. That drop came to test this structure, and now the price has reacted very positively to it. What this tells us is that the game isn't over yet. The market still has a lot to say before we can truly consider a full-scale bear market. Taking a brief detour from crypto, let's check in on the S&P 500. You know, we closely monitor this asset, and what we're assessing here is how the S&P 500 has managed to hold above the key $5,860 level. This is despite the emergence of DeepSeek. Just to give you some context, this Chinese AI initially triggered a downward impulse in the market, which was then followed by another sharp decline. However, these bearish moves still seem somewhat distant from the key structure supporting the ongoing bullish trend, as I mentioned earlier. For now, even the traditional market isn't giving us strong reasons to be overly negative. And now you're looking at the Nasdaq's 4-hour chart. But before we dive in,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
And looking at something different from the S&P 500, we've identified a key structure that extends through these levels. Essentially, everything above this area remains protected by a structure that we know major institutions are paying close attention to. So as long as we don't have a black swan event, we can continue to maintain a positive outlook. Now, shifting our focus to altcoins that have seen major gains over the past year, like XRP, which you're seeing on screen right now, or Solana, another top-performing asset. Let's analyze how these highly appreciated assets are shaping up and whether the crypto market is truly at risk of entering a bearish phase. Looking at XRP on the daily time frame, we can see a defense zone around the $2 price level. Large institutions, as they manage their bullish swings, establish structures they don't want to see break to the downside, as that would leave their investments unprotected. That's why they defend these zones, which is why we place significant importance on XRP's last bearish attack. The fact that it held and bounced off this defense level suggests that, for now, we're far from a major black swan event for XRP. That doesn't mean it's impossible, but as of today, Wednesday, February 5th, it still seems distant. Now, looking at Solana's daily chart, which is the best way to fully grasp its current structure, you might remember that not long ago we were analyzing what could have been an upthrust of its all-time high. This type of event is far from an ideal buying opportunity, of course, especially when conducting a cross-market technical analysis of the entire crypto ecosystem. What we now need to focus on is how, when we see such a strong bullish impulse in the markets, institutions tend to support that move by forming a channel. This structured progression benefits institutional investors by providing a more controlled and favorable environment for their positions. That's why, as long as the base of the bullish channel remains intact, we have no reason to be negative about the crypto ecosystem. And yes, we've seen significant volatility in the markets, not just because of the DeepSeek AI situation, but also due to everything happening in Europe regarding the MiCA law, which primarily affects European exchanges. For example, we've already seen exchanges like Kraken and Crypto.com announce that they will be delisting USDT from their platforms. This is because MiCA requires stablecoin issuers like Tether to hold extensive fiat reserves and European bank deposits. In simple terms, this means that every time a user, whether you or me, buys USDT in the crypto market, whether through an exchange or elsewhere, Tether must have the equivalent amount dollars deposited in a European bank. This significantly complicates Tether's daily operations. Because let's be honest, what Tether has been doing lately is nothing short of genius. Their business model relies on users like us buying their stablecoin, and in turn, they take our money and invest it in US Treasury bonds, securing a guaranteed return. In essence, they're using the crypto ecosystem to finance themselves while running a fully legitimate business. And if you think about it, it's a brilliant model. But now, Europe steps in and says, no, you can't do it this way. You must hold all necessary dollars, or their equivalent in euros, in European banks. And let's be real, we both know how long a bank transfer takes in the traditional financial system, while at the same time, we also know how quickly investors need to trade USDT. They're certainly not making things easy. So between the DeepSeek AI situation and the concerns that smaller investors might have about the MiCA law, this could be one of the reasons behind the recent volatility in the crypto market. But here's an important takeaway. MiCA is forcing stablecoin issuers to change their operations. If they refuse, then exchanges choosing not to work with them makes sense. Also, we need to consider that only exchanges with strong ties to the European market, such as Crypto.com, Kraken, and others, are implementing immediate measures. And these immediate measures mean delisting USD. However, this does not mean that small investors like us who hold USDT on an exchange will suddenly lose everything. What an exchange does is simply convert that USD to another stablecoin, and that's it. Otherwise, imagine the massive lawsuit an exchange would face if it didn't handle things this way. We'd be talking about bankruptcies, basically. And of course, that's not going to happen. Exchanges want to continue operating as usual, with minimal impact from this regulation. If necessary, they'll swap USDT for USDC when the time comes. Now, I also want to update you on what our trusted exchanges, Bitget, Binx, and Litnix, have told us. In the short term, there won't be any issues with Tether for European users. I can tell you firsthand that I have USD in all three exchanges, and I'm completely at ease. In the future, if we receive any updates requiring action, we'll let you know immediately. That way, we can stay ahead of the situation, exchange USDT for USDC, for example, and move on. But as you can see, these three exchanges aren't making any changes. The ones that are taking action include Crypto.com, Kraken, and soon Binance. But life and the market goes on. Now, let's take a look at BNB 4-hour chart. Here we can see how the price is held above a key structural support, which forms the base of a bullish channel. And what seems most likely, something we've already discussed in previous videos, is that we could see some time-based consolidation before the market decides on its next move. This isn't just the case for BNB, but also for Bitcoin, Ethereum, XRP, and Solana. What I want to emphasize is that there's no black swan event here. The MiCA law and the USDT situation shouldn't scare us or affect us in any significant way. Instead, we should stay focused on what truly interests us, technical analysis and cryptocurrencies. If you enjoyed this advanced technical analysis, let me know in the comments. Also, give this video a like, subscribe to the channel, and hit the notification bell so YouTube lets you know when we post new content. Good luck with your trades and see you next time.